Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So this is the part 4 of the video series Encyclopedia of Chart Patterns. If you haven't watched the previous 3 parts, I will leave the link in the description below and on the I button here also on the top right corner. And in today's video we're going to take a look at the pattern called the double top and the double bottom, and we're going to also take a look at the triple top and triple bottom because all these patterns are very similar. So let's get started with the video, and before that, standard disclaimer: I'm not a SEBI registered analyst and any stock discussed here is not a buy or sell recommendation. Please consult your financial advisor before taking any trade or making any investment. So the double top and the double bottom are reversal patterns. If you remember correctly, I have explained about what are the reversal patterns and what are the continuation patterns. They are basically two. If I have to categorize, there are basically two category of patterns. One is the reversal and one is the continuation. And if you have watched my previous videos of this series, I have explained in detail what is a reversal pattern and what is a continuation pattern. And let me summarize a bit. So continuation pattern is basically the prices, let's suppose price is in an uptrend and it takes a pause in between, the consolidation phase, and there it forms let's say a cup and a handle or a inverse head and shoulders, and the price continues the trend. So that is what a continuation pattern is, and the reversal is opposite of it. Like let's suppose the stock is in an uptrend and it forms let's say an head and shoulder pattern or a rounding top, and then it starts falling down. So in this case the trend reversed. Previously the stock was in an uptrend and now it's in a downtrend. So that is what a reversal pattern is. That reverses the direction of the stock. So the double top and the double bottom both are reversal patterns. Let me remove these markings. Yeah, so double top and double bottom are both reversal patterns. Double bottom is a bullish reversal pattern. If a stock is in a downtrend and it forms a W kind of shape like this, like two bottoms, and then starts heading higher, that is what a double bottom is like, and it's a bullish reversal pattern. And the double top is the opposite of it. Suppose a stock is in an uptrend and it forms a shape like this, like M shape, or maybe the two mountains kind of a pattern, and it starts heading down. That is what the double top pattern is. Like I have written here, the double top is similar to the letter M and the double bottom is similar to the letter W. So the double top marks the end of an uptrend and the double bottom marks the end of an downtrend. So that is what a reversal pattern is like. So let's first take a look at the double bottom. Let's first take a look at the double top. So the double top is formed after a long uptrend. Two successive peaks are formed, usually second one being the lower than the first one. So the stock is in an uptrend and suddenly the price rises and it forms a peak, and then this price starts coming down, and at a point like this, as you can see here, the stock takes some support and again starts heading higher. But again the stock faces the resistance at the same level which it faced at the previous point, and again starts heading down. But this time, instead of taking support at this level from where the stock reversed, as you can see here, it breaks that point and starts heading lower. So that point where the stock took the initial support is called the neckline, and once the neckline is broken and the stocks start heading down, we can call it a double top. So double top is confirmed once the price breaks the neckline. So unless in technical analysis, like unless the price confirms the pattern, like unless it gives a breakout, it's not a pattern, like it's not a complete pattern. And uh, once it gives a breakdown or a breakout, then only the pattern is confirmed. Till then it's only speculative in nature. Like just like I said, if a stock is forming two mountains or two peaks, like you can call it a double top, but unless it gives a breakout, it is never confirmed. So it marks the end of an uptrend and a reversal starts. So this is what ideal double top formation looks like. As you can see, the price is coming up and it faces resistance at some point and comes down, and the lowest top between the two peak, this area where the price initially took support and again starts heading higher, but again it faces the resistance at the same level and starts coming down. So now once you have confirmed the two peak formations like you can see here, then this area that acted as a support initially becomes the neckline and a very, or you can call it a validation level or a very important support level. And once it breaks down and the price retests the validation level or the neckline or the support level, once the price breakdowns, it confirms that it's a double top pattern. And to further more confirmation, once it retests that validation level or the neckline and again starts heading down, that totally confirms the formation of a double top pattern or the trend reversal. So what should do the volume activity? So volume activity should be decreasing as we move from left to right. So once when the price is forming a peak and then price forms another peak, the volume activity should be down. So the volume during the second peak formation should be lower than the first peak formation. And once the price breaks the neckline, as you can see in this case, the volume should suddenly start going up, and after the retest the volume should start rising even further. So this is what basically double top looks like. And here are few examples, and I have taken some recent examples. As you can see here, this is the chart of the Larsen and Toubro Infotech, and as you can see here, the price moved from around 4,300 to around 7,500, and it formed a peak here, as you can see, and it came down and took support at this level and again starts heading higher. But again this level of 7,564, the price again faced resistance at this level, and you can see what happened after that. So the pattern is only confirmed once the neckline or the validation level is broken. As you can see here, look at the wick. So after the price breaks down, how to calculate the target? To calculate the target, you just have to mark the length of the pattern, as you can see here, from the top to bottom, and that is what your price target is like here 15.82%, 15.82%. so that is how you calculate the target of the double top. And as you can see here, this neckline, previous neckline, acted as a resistance level. Now previously it was acting as a support, now it's acting as a resistance, as you can see here, although the price came up but never gave a close above it. And look what happened after that. So it also completed the double top target and it fell even further. And here is another example, another IT stock, and it's a very recent example. It gave a breakdown like last week, and as you can see here, it is a very bookish kind of a double top. As you can see here, it's forming a M shape, and look at this was the neckline, and the target comes around at 2,846. that is around 24% down from the neckline level. And here is another example of the another stock named Cabra. It's a battery related stock. I really don't know much about it. So this is the chart. As you can see here, sometimes the peak would be down, the second peak would be lower than the first peak, or maybe sometimes the first peak would be lower than the next peak. There are many exceptions that we are going to take a look at. So different variations of a double top, as you can see here. So this is what failure swing. This is the first type of variation, like second peak fails to penetrate the previous peak. As you can see here, the price came up and came down, and again instead of reaching the previous peak and retesting that resistance level, the price reversed from the lower level and broke the neckline. And in second case, this is the typical M-shaped double top, and in this case the second peak crosses the first peak and then comes down and breaks the neckline. So these are three type of variation of double top pattern. Next we are going to take a look at the double bottom, which is the exact opposite of the double top. So double top is a bearish reversal pattern, and double bottom is a bullish reversal pattern. The stock is in a downtrend, and after forming a double bottom, it starts going up. It marks the end of a downtrend. Here also a double bottom is confirmed only when it breaks the neckline. So unless the neckline is broken, any pattern is not complete. It's only speculative till then. As you can see here, the price is coming down and it takes up support at this level, and then comes up and faces resistance at a certain level, and again comes down, again takes the support at the previous level, and again starts heading up, but this time breaks the neckline and also validates the level. So here also volume activity should be decreasing when we first, the first peak on the downside, when we form the first peak on the downside, volume should be higher, and during the second peak formation the volume should be lower, and once the price breaks out, the volume should start heading higher, especially after the retest of the validation level. So here are the different variations of the double bottom. So in this case also, the second peak never touches the first support level that was formed by the first trough. Sorry, it's not called a peak, it's called trough. And in second case, the typical W, which is the most basic kind of a double bottom, and in third case, the second one, second trough breaks the support created by the first one. In this case also, volume should be decreasing as we move from left to right, and the volume should be increasing during the breakout. And here are a few examples. This is one of the recent examples of Pi Industries. As you can see here, the price came down continuously and took support at this level, and went up, faced resistance, again came down and took the support at the same level. And how we calculate the target? In this case also similar, we just calculate the length of the trough, and we plot the same length on the upper side of the resistance level. And look what here price did. Price touched the target of double bottom target, and then again started heading lower, and again took support at the previous level. So price target also act as the support and resistance level, always remember this. And here is another example of the pyramid, and as you can see here, it is the third variation in which the second trough breaks the support level of the first one and goes a bit deeper, and again starts coming up. This time the price didn't reach the exactly the target price, but it came very close, so the price pattern works. So this is what the triple top looks like. It's just the extension of the double top. This time we have 3 peaks instead of 2, and everything is same. As we move from left to right, the volume should be decreasing. As we form the third peak, the volume should be at the lowest level, and during the second peak the volume should be a little bit higher, and during the first peak the volume should be higher. And once the price breaks the neckline, the volume should increase, and after the validation the volume should increase even more. So it's basically a double top with 3 peaks. And in case of double bottom, it's just the opposite. It's the double bottom with 3 troughs. And as you can see, here is an example I have taken from a book that I will just tell you about. And as you can see here, 3 peaks. This is what a typical triple top looks like, and this is our validation level. And this was the this forms a bigger double top. As you can see here, there could be pattern within a pattern. As you can see here, we have small triple top kind of formation within a bigger double top formation, but this time, as you can see here, in this case the price failed to break the neckline and reversed from that level. And these are 2 books. If you want to learn about the chart patterns, specifically chart patterns, if you want to learn about chart patterns and the trend analysis, then I would recommend you to read these 2 books. One is the Encyclopedia of Chart Patterns. Ironically, the name of my series is based on this book only, and it was written by Thomas Bobowski. And the second book is The Technical Analysis of Stock Trend. It's also a really good book about the chart patterns and the trend analysis, and it was written by Robert D. Edward and Sir John Magee. So these 2 are must read if you really want to know about the different chart patterns, because there are hundreds of chart patterns, and if you want to know about them, then you must read these 2 books and you will learn a lot of different things. So that was it for today's video. If you enjoyed the video and if you learned something, please consider hitting the like button. Don't forget to like, subscribe and share, and do watch the previous videos of this series where I have explained the horizontal pattern, the cup and handle pattern, and the head and shoulder pattern in great details. and have also posted a video how to create a watch list where I've explained the criteria how to select stocks for trading. So that was it for today. Goodbye, take care, and don't forget to like, subscribe, and share.